right, everybody. I'm just doing a short video here on things you can look out for when implementing ICT into your futures trading. The first thing I like to mention is you got to know the market bias at the beginning of your session. So let's say you were trading the New York hours here at like 9 to 11. It would show you here from about 9:15 till about 10 o'clock. It was in a downtrend, steep downtrend, and then it started moving up. But if you look at a higher time frame, and we can see that mostly it's in a downtrend here, and it's starting to come up. It made a low here. That should be your sweep on liquidity. Uh, at about 9:45 today. Then it started coming up from there. And you always, once you know the bias, it's probably going to be positive for the day here. So you can look for your liquidity sweep, which occurred around here. And you always want to sell in the premium and buy in the discount. What do I mean by that? Well, you can use the Fibonacci retracement tool here, get your previous low here, and bring it up to your high. We'll just say it's there for now. And you would be the 50% mark here would be the line you would look at. Below it is the discount, and above it is the premium. So you'd be a buyer in the discount below the 50% and a seller above it. And just get rid of that for a second. And you always want to be looking out for your fair value gaps and market structure shifts. On my chart here, I have an indicator that tells me the change of character, which is the market structure shift. And let's say a bullish fair value gap, we got one right here, and the price trades into it, down into it, you'd want to wait until the market displaces and makes a strong move higher, creating the market structure shift. And if it doesn't make a strong move higher, like here, it went up and barely came back down and touched it, went higher again and made a strong move, that would be a good sign that it could be trending. And we want to trade with the trend, basically. You don't want to be trying to trade in consolidation. It gets too up and down, and you never know if you get stopped out quickly. When coming out of a fair value gap, look for it to make a high, creating external liquidity. So it came out of this gap here, went up all the way to here, and this could be our new liquidity, external liquidity. And when a liquidity sweep occurs, it is likely that the price will reverse direction afterwards. And just keep in mind that you're always going to be moving either towards a high or a low or a fair value gap. And in this circumstance here, at about 11:40, 11:45, we were moving towards the gap, and then it came out of it and traded higher and went up to a new daily, not a daily high, but a temporary high. The daily high was back here in the Asia hours and got up somewhat in that range again, then moved back off of it. So those are some of the basic things that you got to be on the lookout for. First things first, just make sure you know what the bias is for your session, and that'll give you a good feel for whether you want to buy or sell for that period. All right, I'll talk to you next time.